If you're getting started with UK property investment, you've probably been told on some seminar or training course that you should start with Rent2Rent. In this video, I'm going to share with you 10 pitfalls of the Rent2Rent strategy which you won't hear about on property courses or training seminars. My name is Ranjan Bhattacharya. I've been investing in property for 30 years. And since 2003, I've helped thousands of investors achieve financial freedom through investing in property. So in this video, I'm going to share with you 10 pitfalls which if you don't heed, will lead you to disaster in your property investing career. So 10 pitfalls of Rent2Rent investing, all coming up. And stay tuned till the end of the video, and I'll share with you how my students are doing Rent2Rent successfully. Pitfall number 1, Rent2Rent is not passive income. Now, you may have been told that property is the way to quit the rat race and achieve financial freedom. The person that's actually achieving financial freedom is the landlord you're doing the Rent2Rent from, not you. He's achieving financial freedom, time freedom, and all the rest of it. What you're doing is getting out of one rat race and getting into the other. It's the other rat race of having to actively manage a multi-let property, which you don't even have the benefit of owning. Let's face it, guys, managing property ain't fun. It ain't that easy. And the reason we do it is because we own the asset. You own the asset for the long term, and you benefit from the capital appreciation from ownership. With Rent2Rent, you don't have any of that. The landlord has the benefit of that, and you have all the hassle. What I advise my students to do is learn and acquire the skills to acquire the asset straight off the bat. Because at the end of the day, if you want to achieve financial freedom, if you want to achieve wealth through property, if you want some financial security, you've got to own the underlying asset. That is the only way, full stop. Don't care what anyone says, that's just the fact of it. So why not learn the skills to acquire the asset? That's what I say. And if you haven't got the money, that's fine. Learn and equip yourself with the knowledge to do no money down techniques, which I talk about in plenty of videos, and I'll put some links in the cards here. Pitfall number 2. You're targeting tired landlords to rent their properties from. But no one actually tells you that there's a reason why those landlords are tired. So you're out there, you're trying to find some landlord, they're tired, they've got a tired property. The idea is that you rent those properties off those guys and then sublet them. Have you ever given any thought to this? In 20 years' time, you're going to be the tired landlord. Then what? Because managing this stuff is tiring. The way you want to be is where the landlord is that you're targeting, the asset owner. That's the place where you want to be. Pitfall number 3. They giveth with one hand and taketh with the other. What do I mean by that? Well, a few months ago, the government introduced a ban on letting agents or anyone charging tenant admin fees. What has this meant? Well, this has meant that letting agents have a massive issue with where they get their income from. And what they've done is they've increased the charges that they charge landlords. So what they teach you on these Rent2Rent seminars is this. Go out and pitch to a landlord that, hey, I will rent your property off you, and you don't have to pay these high management charges that the letting agents are now imposing. But here's the problem. A few months after that ban on tenant admin fees, the government introduced a new rule on HMO licensing. Got a whole video on HMO pitfalls, and the link is in the corner there. So thanks to this HMO licensing rule change, what this means is that you can't sublet the property that you have Rent2Rented to more than 4 tenants. Before, you could do it to 6 tenants. Now, the effect of that is to torpedo the profitability of any Rent2Rent proposition. So remember that. Thanks to HMO licensing, if you want to rent it to more than 4 people, you will need to have a license. And who will be paying the costs of getting that HMO license? Most likely you, as the operator of the HMO. Pitfall number 4 is not taking on rent-to-rent properties in A1 lettable condition. Remember, if you take a dive on and it's an absolute mess with lots of sort of repairs and all the rest of it, under a rent-to-rent arrangement, you will be taking it on lock, stock and barrel and be responsible for internal repairs during the lifetime of that rent-to-rent agreement. And that can be an absolute nightmare because a lot of people are so eager to get a rent-to-rent deal, they don't look at what they're taking on. You've got to take on stuff that's in A1, lettable, ready to go condition, and ideally you've got to get the existing landlord to basically get it in that state before they pass it on to you. Number 5 is understand your landlord's tax situation. Now, why do you need to do that? Of course, because of Section 24, and I've got a whole video explaining Section 24 and what that's all about, and there's a link up there to tell you all about it. But Section 24 basically means that if you own buy-to-let property in your own name, then you have to pay tax on mortgage interest. Now, why do you care about that? Well, you might sign a 5-year rent-to-rent agreement with your landlord. You may put in some effort to kind of reconfigure the property, maybe buy some furniture or set it all up for multi-let and get some tenants in. And then a few years go by and the actual owner of the property finds that it's uneconomic for them to let that property to you because they didn't know about Section 24. They didn't know that they are having to pay tax on their mortgage interest. And they didn't know that the amount they are paying in tax and mortgage interest is more than the amount you're giving them on the rent-to-rent deal. So basically they're at a loss. Now I know you've got a contract and all the rest of it, but let's put it this way. If the owner of the property is making negative cash flow month on month because you didn't understand their tax position, then guess what? The whole rent-to-rent agreement will fall apart in no time. Pitfall number 6 is understanding whether the landlord will be in breach of their mortgage conditions. Now remember, if you're letting a property or leasing a property off a landlord and they've got a mortgage on it, you can bet your bottom dollar that subletting is against the mortgage terms. And if the lender ever found out that the property was being sublet room by room in the rent-to-rent kind of way, then the actual owner of the property will be in breach of mortgage terms. The bank or whoever the lender is can call in the loan, and that will torpedo your rent-to-rent agreement and whatever investment you've put into that deal. Pitfall number 7 is buildings insurance. Now the owner of the property will have buildings insurance on it. Now you've got to make sure that that buildings insurance has been amended to reflect the fact that you are multi-letting that property. If it's not, and anything happens or any claim is required, then that buildings insurance will be invalidated. So if you do get the owner to upgrade that buildings insurance to take into account what you're doing, well, first of all, the insurance company have got to agree to it. And then if they do, they'll want an extra premium. Who's going to pay for that? That's something you've got to agree up front. But don't do a rent-to-rent unless you make sure the buildings insurance people actually know what you're doing and it's covered for that usage. Pitfall number 8 is prepare to hand back the property one day. Now your rent-to-rent agreement might be for 3, 5 or 7 years with the landlord. And at the end of that term, you're going to have to hand it back. And your rent-to-rent agreement is likely to say that you've got to hand it back in the same condition that you took it out in. Now, you know what? Most people are not accounting for that. Most people are not saving out of their monthly cash flow during the rent-to-rent agreement so that they can, at the end of the lease, basically do it up again to its original standard and hand it back to the landlord. Most people are not accounting for that cost, most people will have a massive hit when they have to hand that property back eventually. So make sure you account for that in your monthly positive cash flow each and every month and save a little bit aside so that you can actually hand back the property in the condition you got it in. Pitfall number 9 is deciding who's going to pay for the costs of setting your property up as a multi-let. Now, sometimes people agree something with the vendor, but in most cases, if you are taking the property off a landlord in its entirety and you want to split it up for multi-let, then putting individual locks on doors, if you're going for an HMO license, the costs of getting that license and complying with it and all the certification, putting fire doors or fire blankets in places and all that sort of stuff, that will be a cost that you will have to bear. I've heard of people taking a property on a 5-year rent-to-rent and spending as much as £50,000 preparing someone else's property for multi-let. And if the rent-to-rent agreement kind of fails for whatever reason, that's an upfront cost that you have had to bear in a property you don't even own. Pitfall number 10 is clearly defining in your rent-to-rent agreement who pays for what type of repair. Normally, the building owner will pay for structural repairs and repairs to do with the fabric of the building. So these will include things like the roof, or if there's a failure in the damp-proof course, for example, or something like the boiler going. Whereas you would have to pay for things like internal repairs. So that would be like a door handle falling off or something like that. If the property is supplied with white goods, for example, ideally if the fridge or the washing machine packs up, that should be something that the owner pays for. So the pitfall that people do not actually take into account is clearly defining which expenses, which repair expenses will be the building owner's liability and which expenses and repairs will be the rent-to-rent operator's liability. Make sure that's clear in your contract. So I'm not saying rent-to-rent doesn't work. I'm saying rent-to-rent is not as easy as they make out on some of these seminars and courses. There's a lot of work involved. There are a lot of pitfalls for the unwary, and I've shared with you 10 pitfalls that you probably don't hear about on a lot of courses and seminars. So make sure you tick off all of those and decide whether it's worthwhile for you. Personally, if you're thinking about renting a residential property from someone and then spinning it out as a multi-let, I think if you're going to learn that and put in place all you need to do that, why bother? Learn how to acquire the asset and acquire the asset with the minimum of your own money. Because remember, if you want to achieve financial freedom, if you want to achieve wealth through property investing, what it's about is owning and acquiring the asset, not renting it from someone else. The people that do rent-to-rent successfully are typically doing it with commercial buildings, because with commercial buildings, rent-to-rent is far more accepted. And also you don't have to worry about being in breach of mortgage terms, you don't have to worry about being in breach of buildings insurance. The leases are all very common and they allow for rent-to-rent type of arrangements. And since the repair obligations are very, very sort of strictly defined, if you like, in commercial type of leases, that you just don't get the sort of pitfalls that you kind of get. A lot of offices, for example, are rented off the building owner and they're sublet as serviced offices. People like Regis and WeWork do that model. A lot of my students are working with smaller buildings like shops in secondary parades, where they're taking those buildings and off a landlord and then leasing them out as maybe smaller office suites or per desk on a co-working model. Even when, I have a student also who is renting semi-agricultural buildings from landlords as a whole, and then subletting those for people that want to store their classic cars in them, for example. So there are all sorts of ways of doing rent to rent where you're not circumventing or messing around with any regulations or being in breach of mortgage terms and the like. There are plenty of ways to do rent to rent in a very, very sensible way, in a very, very commercial way, which makes a lot of sense to people. If you're interested in learning more about commercial property and the wonders of commercial property investing, of course I do some courses in that. I only do 3 workshops a year. There's some details on the screen if you want to find out about those. But if you're going to do residential rent to rent, tick off all these pitfalls in this video and make sure you don't fall foul of those. Hope you've enjoyed. Please let me know what you think. Comment in the descriptions below and all of that. Let me know exactly what you think about what I've said. I really want to know. But until the next video, happy investing and bye for now. If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing!